Hey guys, it's Sasha. Tesla is looking to set the new world record for the highest production car factory in the world. And this is absolutely bonkers because it blows all projections for Tesla's growth out of the water. If you are a Tesla shareholder like me, you might get excited. New data has just come in for Giga Shanghai production for August, and I'm going to explain that data. There's some nuances, but it is seriously good. And Martin Viecha, Tesla's head of investor relations, just gave a speech in San Francisco at an invite-only Goldman Sachs event. And in that speech, Martin explains how Tesla is ramping production in the second half of this year beyond where anyone thought that they would be able to get to. We are going to talk about all of that, plus Tesla entering the lithium mining business for its batteries. More on that a bit later, but just before we do, Tesla's stock dropped over 4% yesterday. The stock market had its worst day since June 2020, with the S&P 500 losing 4.3% in one day. Yesterday's CPI data showed inflation went up 0.1% in August, which scared investors who thought it went away all by itself. And the headline figure only dropped because of the big drop in oil prices in the last 2 months, while food and shelter inflation are continuing to increase sharply. And naturally, a lot of investors are fretting ahead of next week when the Fed might increase rates by 75 or even 100 basis points. If you are concerned about the level of inflation, the energy crisis, the impact of a potential recession on stocks, you could instead choose to park your money in art with MASTERWORKS, who are the sponsors of today's video. Prices of art go up and down just like stocks or anything else, but according to the Art Price 100 index, the price of leading art has far outpaced the S&P 500 by more than 100% in the last 22 years. And you can see how it fared during the dot-com crash and the financial crash. Although past performance is of course no indicator of what will happen in the future, but MASTERWORKS buys famous paintings and securitizes each one so that you can go and invest by buying shares. MASTERWORKS will then store the painting on your behalf, and at some point in the future they will sell it, hopefully for a profit. Investing in art has its own risks. Your money might be tied up for some time, things like that. But the artworks that MASTERWORKS sold so far show some very interesting returns, and you get to invest in a real painting by somebody like Pablo Picasso rather than an NFT of a monkey wearing a funny hat. If you are curious, go and use my link in the description to skip the waitlist and get priority access to the platform. Data from the China Passenger Car Association that just came out said that Tesla sold 76,965 cars made in Shanghai in August. And that by itself sounds pretty good. It is just shy of the 78,906 cars that Giga Shanghai sold in June, which is the record, but August is the first month of production and an incomplete month of production after Tesla's factory was shut down for about 3 weeks, upgrading the Model Y and the Model 3 production lines. The official capacity for Giga Shanghai, according to Tesla, is 750,000 cars a year, and you can see the massive amount of sandbagging going on because the construction of the production line upgrades was already complete by the time the last earnings call took place and this figure was published. And sure enough, the first month the Giga Shanghai reopened, they manufactured about 77,000 cars, which is a run rate of 924,000 cars a year. But August was a ramp month. Production of the new Model 3 line was apparently disrupted in the first week of August and only started fully kicking in after that, and the Model Y was only just getting started. And there was one other constraint. There were reports that Tesla Shanghai, along with many other large factories and car manufacturers, was forced to intermittently shut down production in August because of the power shortages across China. Over the summer, China had the worst drought they had seen in 60-odd years, and China generates a lot of their energy through hydropower like the Three Gorges Dam. Some of Tesla's suppliers, especially those further up the river, had enforced shutdowns throughout August, which affected the supply of parts to the factory. So the 77,000 figure is the first month of the ramp up and after that constraint. Numbers quoted by several different sources say that the Shanghai factory is now equipped to make over 3,000 cars a day. And we should get a much bigger picture of how accurate that is, what over really means as we see production data ramp over the next few months, because Tesla is known for being slightly cautious in their estimates. But at over 3,000 cars a day, Tesla should be hitting over 90,000 cars a month from the Shanghai factory alone, which would net 1.1 to 1.2 million cars a year. But remember when Giga Shanghai was shut down completely in April? Well, after that shutdown, Tesla wrote a letter to the local authorities in Shanghai's Lingang Special Area, which is where they're based, and in that letter, they thanked them, according to Reuters, but after thanking them for helping to reopen the factory, blah blah blah, they also said that Tesla will build a second plant in the area near the first one that will have an initial annual capacity of 450,000 cars. Apparently, according to Reuters, Tesla said that themselves in the letter. And now we have a spike in reports over the last few days of a big plot of land being acquired 3 kilometers from the Shanghai factory, somewhere between the factory and the port that they used to export their cars, and groundworks have apparently started in July, although on a superficial level at the moment. We'll have to wait and see if there's any truth to these rumors, but if there is, the 2 Shanghai plants would have a combined capacity of about 1.6, maybe over 1.6 million cars a year, which is more than the largest car factory in the world today, which is Hyundai's Ulsan factory in South Korea. Now, a couple of days ago, Martin Viecha, who is Tesla's head of investor relations, talked at a closed Goldman Sachs event. Business Insider managed to get the inside scoop, although there is no video or an official transcript, and according to Business Insider, Martin said that Tesla had been able to cut the cost of production of their cars from $84,000 per car in 2017 to $36,000 per car in the last few quarters. And almost none of those savings came from battery costs. Now, Tesla only started manufacturing the Model 3 late in 2017, and presumably the Model 3 and the Model Y production costs are lower than the Model S and the Model X, but it's still impressive, and remember that Martin is responsible for investor relations, so there might be a bit of spin put on those numbers. Tesla's been busy implementing the best part is no part approach, single castings on their cars instead of hundreds of separate parts that have to be put together and welded, and the $36,000 figure includes Fremont, which is an older factory that was not purpose-built by Tesla, was adopted, and Martin said that as more new gigafactories ramp up around the world, that will push the cost of production down even further, especially with localized sourcing. He said that there have been 2 revolutions in the whole 120-year history of car production since they were invented. Henry Ford building the first mass production line for the Ford Model T way back when, and then Toyota building the first modern, cheaper, much more highly efficient automated production line in the 1970s, and Tesla reckon that the innovation that they are bringing to the fundamental structure of the car, how it is produced, is the 3rd revolution in car production, which is a pretty bold claim. Most importantly, Martin also said that Tesla want to eventually make a cheaper, smaller car in the future. And this is big because Elon Musk shot down the idea, completely destroyed it, the idea of a compact car back at the last shareholder meeting in October 2021. But in reality, if Tesla really want to go and hit 10 million cars a year or more, like the 20 million figure that keeps being quoted, they will have to enter the compact space eventually. One limiting factor that Tesla has in producing electric cars at massive scale is the supply chain, especially the supply chain around materials used for lithium-ion batteries. And one fairly critical material for lithium-ion batteries is lithium. News broke a few days ago that Tesla wants to build the first of its kind lithium hydroxide refinery on the Texas coast. Chile, Argentina, and Brazil are the biggest producers of lithium after Australia, and Tesla want to go and build their own supply of lithium for Giga Texas, which is expected to ramp and overtake Giga Shanghai as the biggest car factory in the world over the next few years. Tesla has said that if Texas negotiates some tax breaks for the factory, they can start construction as early as Q4. If not, they are also considering Louisiana as the alternative because they need it somewhere on the Gulf Coast to get the raw materials into the refinery, although I am guessing that the Louisiana location is more of a leverage point they're using to try and get the deal with Texas done. And there is a good reason to believe that they will get a deal done because Elon Musk is on very good terms with the authorities. Here he is with Greg Abbott, the Texas governor. If Tesla do go ahead to build the refinery, it will be the first of its kind in North America. Elon Musk is currently working on part 3 of his Tesla master plan, and the core theme of this plan is going to be scaling production to levels no company has ever hit before. And building your own giant refinery to make the materials for the cars that you are building would fit right into that kind of plan. Elon Musk hinted that Tesla will announce one new site for a gigafactory by the end of this year. Maybe it's going to be more. He's only said that there's going to be one. As it stands, a second gigafactory in Shanghai and Canada seem to be the front runners as the potential locations, with rumors on both getting quite hot, with Indonesia and Brazil closely following. With the level of demand in Europe being through the roof and interest in electric vehicles way ahead of the US, a European location might also be on the cards because it would make a lot of sense at some point sooner rather than later. As an investor in Tesla, this might just be one of the most exciting times, as the production ramp in the next few quarters will take Tesla to a place where they will literally start overtaking all the large traditional manufacturers in terms of pure numbers of cars sold, let alone revenue and profit numbers. numbers. And we're only about 5 weeks away from the Q3 results, which are on track for both record production and record-breaking P&L numbers, with Berlin and Austin still having at least 18 months of scaling ahead of them. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, and I'll see you guys later.